Have you ever wondered how a digital file can be worth millions of dollars? Well, in today's digital age, that's not only a possibility, but a reality thanks to the rise of non-fungible tokens, or NFTs. What are NFTs? NFTs, short for non-fungible tokens, are unique digital assets that represent ownership or proof of authenticity of a digital item. These items can range from digital art, music, videos, to virtual goods in the digital realm. What sets NFTs apart from cryptocurrencies like Bitcoin or Ethereum is their invisibility. Unlike traditional money, NFTs are not interchangeable on a one-to-one basis. Each NFT is one of a kind, making it, well, non-fungible. Alright, let's take a closer look at how NFTs really work, breaking it down step by step. Firstly, NFTs are powered by blockchain technology. Think of blockchain as a highly secure and transparent digital ledger. It's like a public record that verifies ownership of digital items. Now, what sets NFTs apart is the use of smart contracts. These are self-executing contracts that automatically handle the transfer of NFT ownership. When you buy an NFT, the smart contract ensures that the ownership of that unique digital item is transferred to you immediately. So, how do NFTs come into existence? Well, artists and creators mint them. Minting is like the process of creating a digital certificate of authenticity. Artists upload their work to specialized marketplaces, and during this process, they can specify how many copies of the NFT will be available. But it doesn't end there. NFTs are not just about ownership. They also keep a detailed record of who has owned them and their provenance. Provenance is like an item's history, and for NFTs, it's a big deal. Knowing that a particular NFT was once owned by a famous collector or featured in a prestigious gallery can significantly enhance its value. So, that's the nuts and bolts of how NFTs work. They're built on blockchain technology, utilize smart contracts, are minted by the artists, and meticulously record ownership history and provenance. But why is all of this so important? Stay tuned as we explore the implications of NFTs for artists, collectors, and the digital art market. Why are they so popular? The world of NFTs may initially appear complex to many, but those who have understood the ins and outs of this world often find compelling reasons to invest in these digital assets. One common motivation for purchasing NFTs is the appeal of the digital art they represent. People buy NFTs not only as investments, but also to appreciate the aesthetics of the attached artwork. These digital pieces can be displayed in various ways, from digital frames to smartwatches, allowing owners to derive enjoyment and value from them. NFTs can also serve as luxury items. Some NFTs command staggering prices, positioning them as symbols of prestige. For example, an Apple Watch with an NFT background may be considered more valuable than a Rolex in certain circles, driven by the exclusivity and rarity of these digital possessions. Human beings have an inherent inclination to collect, and NFTs offer a new avenue for digital collections. Whether driven by nostalgia, diversification of wealth, or pride in their collection, people are building digital treasure troves through NFTs. Utility is another factor attracting NFT buyers. Owning an NFT can grant access to exclusive events, communities, or even future token distributions. Some creators use airdrops to reward NFT holders, similar to dividends for shareholders, fostering a sense of belonging and value. NFTs can also open doors to various opportunities. Displaying your NFT as an avatar on platforms like Discord or Twitter can signal trust and membership in exclusive communities, potentially leading to partnerships and unique work opportunities. For many, owning an NFT is a tangible expression of ownership in the digital realm. This sense of ownership is akin to possessing physical items. Intellectual property rights associated with NFTs can provide commercial opportunities, such as printing NFTs on merchandise or earning royalties. Investment is a driving force for many NFT buyers. The potential for significant returns is exciting, whether through acquiring rare NFTs at flat-rate costs, speculating on undervalued projects, or reselling NFTs for profit. NFTs can also generate income depending on the type of NFT owned. Some projects offer token holders access to information or fungible tokens that can be used as currency. Finally, the NFT marketplace serves as the epicenter of the booming NFT ecosystem, where buyers and sellers convene to trade digital assets and collectibles. Think of it as a digital bazaar for the modern age, but instead of physical goods, it's all about owning and exchanging unique digital items. What does it mean for the artists? For artists in particular, NFTs represent a remarkable shift in the balance of power. They provide a direct channel to a global audience, removing the need for intermediaries like galleries or agents. One of the most significant benefits for artists is the potential for ongoing income. Thanks to smart contracts, artists can earn royalties every time their NFT changes hands in the secondary market. This means that as their work gains value over time, artists continue to benefit financially, even from resales. This financial stability can be a game changer for artists. It not only offers them the opportunity to focus more on their creative process, but also provides a more equitable distribution of wealth in the art world. One of the most striking examples of the explosive popularity of NFTs can be found in NBA Top Shot, a partnership between Dapper Labs, the creators of CryptoKitties, and the National Basketball Association. In this groundbreaking collaboration, the NBA licenses individual highlight video reels and other related content to Dapper Labs. They then transform these iconic moments into digital collectibles available for purchase by consumers. Each video reel showcases memorable plays, like a jaw-dropping slam dunk, some featuring distinct angles and digital embellishments to ensure their uniqueness. Even if someone were able to create a perfect copy of the video, it would remain instantly recognizable as a counterfeit. The success of NBA Top Shot is staggering. It has already generated an astonishing $230 million in sales. Recently, the venture received a whopping $305 million in funding, backed by notable figures such as Michael Jordan and Kevin Durant. What's particularly intriguing is the value attached to these video reels. Some of the most sought-after moments include LeBron James' Cosmic Dunk, which sold for a staggering $208,000, and Zion Williamson's Hollow MMXX block, which fetched $100,000. These unique NBA highlights have ignited a frenzy among collectors, turning them into highly coveted digital assets. These distinctive NBA moments are released into the marketplace through pack drops, which vary in price. While the most common packs sell for just $9, more exclusive packs can command significantly higher prices. NBA Top Shot exemplifies how NFTs have taken the world by storm, transforming the way people value and collect digital content, and in this case, redefining how we cherish iconic sports moments. The bottom line is that NFTs have not only redefined ownership, but also ignited a revolution in how we perceive, create, and trade in the digital realm. As we conclude our exploration, remember that NFTs are more than just digital collectibles. They represent a paradigm shift in how we value and interact with the digital world. So, whether you're an artist seeking empowerment, a collector embracing the future, or an investor seeking opportunity, NFTs offer a world of possibilities. As this exciting journey continues, keep your eyes open for the next wave of innovation, because in the world of NFTs, the possibilities are limitless. Thank you for joining us on this enlightening journey into the rise of cryptocurrencies and the fascinating world of non-fungible tokens. Stay curious, stay informed, and embrace the digital age with confidence.